So the days are getting a little bit warmer here now. Sun shines out, and happened to be out running some errands over the last couple of days. And as I was driving past the strip of automobile dealerships, happened to come across the Indian motorcycle dealer with all of their nice looking motorcycles their slingshots and other off-road vehicles. And every time I have looked up Polaris Inc, PII, in the past, it's like, stock's very expensive. It's at its highs. It's usually in the peak of summertime when you say, oh, look at that boat, look at these toys. Looking at it now, kind of a stroke of luck. The economy is, of course, we're struggling a bit. We're through a tough period. Some of the stocks have really sold off. And that's what makes this time with Polaris a little bit different. As we know, Polaris is kind of alternative vehicles, right? So four-wheelers, the off-road vehicles, the all-terrain vehicles, snowmobiles, the boats, pontoon boats, power boats, motorcycles, government oriented type vehicles to transport troops over rougher terrain. And then also some electric vehicles as well. So that could be expanding, but thinking outside type of sports type activity for motorized vehicles, this company is it, Polaris. And it's quite an interesting company. And if you're familiar with it the way I am, more so now than ever before, they operate really in three different divisions: off-road, on-road, and then marine division. But the company has really struggled as of late. Sales have gone down, about 20% in the past year. Lots of things happening in a challenging environment. However, these companies typically come roaring right back, and now could be the best time ever to jump in on this. So we've had the tough period. We've had challenging retail in the United States. We've had decreasing sales in profits, but the balance sheet is actually quite strong for Polaris Inc. There's great cash flow, still very profitable. They cover their dividend quite handily. And I think we'll take a little bit closer look at the fundamentals and see if we're in alignment here. Insiders own about 3% of the company, which is always good. And the estimated TAM, or total addressable market, is estimated at about $50 billion a year. So there's quite a bit of market for these products. I guess lastly, this is primarily a U.S.-based operator. 79% of revenue comes from the United States, 15% international, and about 6% in Canada. So we got not too much to worry about here. But let's take a look at the fundamentals and see where things shake out, because I was pretty excited when I saw this company and saw where the price was at just in recent days. With sales that have recently reported of $7.2 billion in the recent year that they just reported less than 2 weeks ago, down over 20%. So we've had some contraction here. Understood. We've covered off on some of those issues: challenging retail, tough economic outlook, lots of unknowns, higher interest rates for those that are borrowing to make those purchases and then recently, overall gloomy economic outlook or investor sentiment, and just in general pushing prices down, tariffs, trade wars, you name it. But keep that in mind: $7.2 billion in sales, strong cash flow. And this pays a dividend as well. It's a 6% dividend that they have paid for 30 years and have increased it every year for 30 years. Boy, it's kind of a little extra bonus that you get paid something to wait. And I love seeing that money come in because it gives me more money to invest in lots of different stocks. Market cap of about $2.5 billion. So just a fraction of the overall sales. Price of in the $44 range per share. This is actually touching on multi-year lows. We haven't seen this low of a share price since COVID time when that hit, and then before that it was 2011. So kind of an opportune time to take a look at it. But it has bounced back consistently over the years from tougher economic situations. In the past year, this has traded between $40 a share and $100 a share. So we're at the real low end of that spectrum right now, which is also another indicator that you're getting good value on this company. Balance sheet, again, we've covered off on that. There's more cash than debt, and they're still producing solid cash flow. And they just raised the dividend again. I think it was 2 to 3% in recent weeks as well. Analyst target on Polaris is between $48 and $120 a share, with an average target of $66 a share. Again, when things get a little gloomy, everything shifts down, but this can go significantly higher in a period of economic expansion. I guess all things considered, I did jump in on Polaris. I like the price range. I'm willing to take a little bit of a chance on it. I'm not sure if this is the bottom or not with the company. If it's not and it drifts a little bit lower, I'll be buying more. I'll be adding to that position because it has a solid dividend and a great lineup. And summer's around the corner, at least in my area of the world. And then a lot of the products they offer are showcased, and it gets pretty exciting. So multi-year low, solid dividend. The economics will turn around. This helps diversify my portfolio a little bit more. It's an opportunistic purchase for a company that has also a very strong lineup. Let me know what you think. Wanted everyone just to be aware of Polaris. Interesting time to buy. Great company. Interesting lineup of products. I'm in. We'll talk to you soon.